Well, the price of a barrel of West Texas intermediate crude oil is sitting just above $71 per barrel this morning. Our next guest says oil markets will remain oversupplied until the summer, when he expects prices to trend upward. Let's bring in Reid I'Anson, senior commodity analyst at Kpler. Reid, thanks a lot for joining us. The most recent news in the crude market is Saudi Arabia cutting prices, I believe unexpectedly. So this is a measure of concern. Seemingly, Saudi Arabia is concerned about the state of demand in the market, not only the state of supply. Give us your take on this move by Saudi Arabia to cut prices.
Yeah, it plays into our narrative right now, which reveals that the market is oversupplied, and we think that this dynamic is going to continue through the month of April before we see balances start to tighten quite a bit. And as you mentioned, through the second half of the year, we do see prices moving higher. It is important to keep in mind, though, that there is some nuance here. We think that we could see a little bit of upward price appreciation over the next few weeks as China really is stepping into the market and buying a lot of crude. Keep in mind that China likes to purchase crude when prices are depressed, and so they're stepping into the market. Keep in mind that this is not necessarily an increase in demand within China. These are going to lead to higher inventory builds, and so while we could see a little bit of price appreciation over the next few weeks, we think that ultimately prices are going to trend to the downside over the next couple of months.
I'll give the next question to Patrick Horan, our featured guest. Patrick?
Yeah, I'm curious if your assumptions behind oil demand are a steady state global economy, a rising global economy, or what kind of conditions that you see that see a decline in demand?
Yeah, we see demand flat to down. Yeah. We see demand flat to down slightly this year. I think really the narrative for the oil market this year is going to be driven by the supply side, whereas it was really a demand side story or narrative in the post-COVID period there. But I think that this year it's really going to be a supply side story. And specifically, I just want to focus in on Saudi Arabia for a moment. We think that they're going to be very aggressive at holding production cuts steady through the end of this year. We think that production out of Saudi is going to hold at around that 9.5 million barrel per day level. And so we think that, yes, Saudi is going to be very aggressive on the supply side. If issues with OPEC start to creep up, that is a massive downside risk for oil prices. And so I think Saudi's going to do whatever they have to make sure that they keep this market balanced right now.
Iran and Venezuela are putting more oil onto world markets than they have in the recent past. How material are production gains from those two countries?
I think Iran is the country to keep an eye on, albeit it's been interesting to note Iran has been trying to edge up prices that they're selling into China as of recently, and Chinese purchasers have been less interested in lifting Iranian crude because of that reason. So I would keep an eye on that kind of battle for how much Iran can get for its crude in China. When you look at Venezuela, look, the ramp in production there is going to be very slow. Downstream production issues obviously have persisted for a very long time, given the implementation of sanctions from the United States. And so I think, again, over the next few years, 100, 200, 300 KBD in production gains out of Venezuela, translating to exports looks likely there. So just gains on the margin from Venezuela.
What about the U.S.? U.S. production was a big surprise in 2023. Yeah,
look, we came into 2023 expecting a lot of folks in the market expecting production growth of 600 KBD. We almost finished out at 1 million barrels per day in production gains. That was huge. We think that 2024 will mark a notable slowdown. We think that production growth will be closer to 250 KBD. If we're looking at non-OPEC producers, and I'm going to include Brazil in this list, even though they are technically an OPEC observer, we think that Brazil's probably going to lead the pack this year in terms of production growth at around 300 KBD. So Brazil, alongside the U.S., a country to watch this year.
I'll let Patrick in with another question. Patrick?
Sure. I'm curious why you see oil prices resuming upwards towards the middle part to the end of this next year.
Balances are going to tighten significantly through this summer, largely due to an increase in runs, just to meet summer demand, but also the fact that we do think that OPEC is going to remain committed to their cuts. And so the biggest change here is that you're going to see global inventories. They will start to draw again through the summer. That is going to provide some upward price appreciation. On the demand side, especially on the macro side too, we do think that central bank cuts out of the ECB, the Bank of England, and the United States will really start to roll through. And that will also provide some support to prices, albeit it will take time for demand to catch up, I think.
Okay, we have less than 60 seconds left. Why don't we pivot to iron ore? I know you watch that commodity very closely as well. China, as always, is material there.
Yeah, prices have really trended higher since August. And as you mentioned, this is a China story. We have to keep an eye on what China does on the fiscal stimulus side of the picture. We think that the government's going to target a 4.5% to 5% growth rate this year in line with 2023 levels. However, they no longer have the COVID tailwind to really allow for that large year-over-year growth. So they're going to have to come in with heavy amounts of fiscal stimulus. We think it's going to focus on infrastructure. We think it's going to help to support the property market, and that should provide support as a result to iron ore prices as well.